sure his flowers are an arriving time for Carole in Germany on Sunday. We'll see. But an early happy Valentine's to everybody. Let's kick off in Asia, I think. Australia is Asia. We'll still stick with that. Sydney, Peter McGuire, CEO of XM Australia. Peter, a bit of a breather in the market open this morning in Asia, but nonetheless, this has surely been a big rally that seems to be still got more legs.
Well, good morning, Sean, and good morning, fellow panelists. Yes, it certainly has. It has been a little bit of a sell-off today, but nothing dramatic. New Zealand was down 0.5%, and everything else is, just choppy. US dollar index at 90.3. Let's see what happens over the next matter of weeks. It's certainly been, again, fairly range-bound, Sean. And also the interesting one I've been looking at is the gold picture. So it's had an enormous rally, the best part of about $120, $130 since the start of the month. So up and down and all around.
It's certainly a time in which everything seems to move in large steps. There's no more of this incremental tippy-toeing around. It's if you're not moving double-digit percentage on a daily basis, you're kind of not participating. Andy Laven, is this sustainable? Does there, putting aside the equity markets and the fantasy land, is there fundamentals now underpinning the oil markets with another significant draw on inventories in the US yesterday?
No, I think everything is in a sense on a knife edge. And that's why you see the significant volatility. I mean, your first two bullet points kind of show oil drops after a strong rally, yet stockpiles plunge. So things are moving left and right just because they can move. I think a lot of it is starting to flow through into the fundamentals, but there's not sufficient certainty in terms of the demand side for the fundamentals to really start winning out. That's where the uncertainty is. We know there's enough oil there. We know that OPEC could produce more. We know that they are going to kind of keep it cut back to manage things. So the supply side is all managed well. The demand side is what we really don't understand. And when we see the demand side starting to pick up in a robust way, that's when the fundamentals will really start to work properly.
I mean, the demand side, however one wants to quantify it, if the OPEC Plus are looking at inventories at 5-year averages, we're now have stocks down to what they were nearly a year ago, March, before all of this drama started. So surely we're getting into the zone now where that is a strong underpinning for stronger prices that we're seeing.
So that is true historically. However, historically, we were very comfortable in terms of what demand was going to do during a year. It wasn't going to change much. Sitting where we are now in February, there are signs that the demand will go back towards where it was, but there is not a confidence about that. It should, as the virus starts to reduce, as people get vaccinated, as people become more comfortable traveling, demand will go up, but it's not certain. And that's the challenge. So yes, the fundamentals on the stocks and supply are all well understood. It's the demand side which has significant uncertainty.
Carole Nakhle, CEO of Crystol Energy, sorry to tell you, in case you didn't know, but you're going to be locked down for yet even longer in those German forests. It seems Europe's pain just doesn't have an end in sight.
Well, it's okay, Sean. Good morning. Good morning, everyone. As long as I get Andy's flowers on Sunday, that would more than compensate.
I hope Christoph is not listening, but nonetheless.
Well, I hope he opens the door to pick them up. Well, look, definitely. I mean, Andy said that demand side is the one which is less understood, but actually, all along, not only now, demand is in general less understood than the supply side. And this morning, when I just had the chance to look at the news items that Irene sent, I saw that oil prices went down, and I rushed to check the numbers, and I looked at the numbers and they were still pretty good, but it was relatively speaking. So we're still talking about a $61+ per barrel for Brent crude. And that is a major achievement. Yes, demand remains uncertain. So if you look at the US, for instance, yesterday numbers about the consumer price index did not rise as much as it was hoped, which indicates a really still a subdued level of economic activity. But at the same time, the market read it in a positive way because that could support the fiscal stimulus to go ahead. And that's also what we heard. We got this kind of signals from the chairman of the Federal Reserve Bank of the US. So all in all, there is a lot of uncertainty. Yes, things will move up and down, but the overall direction is in the up side, and OPEC Plus takes most, if not all, of the credit for propping up prices. And that's why I'll be watching very closely what they will decide on in March for what they will do in April, because that will be a very important factor going forward for oil prices.
Peter, the signals out of the Iraqi minister, which is published on the Digest today, is that Saudi Arabia is likely to end this 2 months of unilateral cut of 1 million barrels a day. I'm wondering your own view. Is the market ready for more oil? There was a lot of concern at the beginning of the year that OPEC was going to move ahead with their planned 2 million barrels a day. All of the market signals were, no, don't do that. And they backed away from it quite dramatically. Now, come the second quarter, is the market ready for Saudi to put back this 1 million?
Well, Sean, I'll answer it in one way. Over the last 110 days, we're up 50% as far as the price of Brent. So that really tells me from a trade perspective, it's been bull market. It's been a wonderful time to be long for crude over that period since the late part of October. So yes, it may be able to absorb, though I still think that 60 is the handle. We did a lot of work together across, Gulf Intelligence, and everyone came up with a forecast, and we seem to have hit that number far quicker than anyone realised. Here we are in the 11th of
I voted 60 in February just to put it out there.
I think I did too, but I just say I don't think there's much more upside. I'm worried about the inflation numbers. I'm worried about, that's further down the road. But I hear what Carole's going through, the lockdowns in Germany, the uncertainty across Europe, as Andy mentioned. So, yes, maybe there's the opportunity to, for the Saudis to re-engage. But I think if you're a producer, Sean, you're a lot happier today than what you were in October, November.
I suppose, Andy, the question is probably the other way around. What argument could the Saudis make to themselves, or to anyone else for that matter, to continue with this cut? I'm sure they'd be delighted to put some more barrels on the market, but what would be the argument to continue, A, with a reduced output, and B, with a unilateral one?
So I think the key question is, what would the impact be of putting more oil on the market? And in my view, I think without certainty of the demand that's going to come and take that extra barrels, you've probably got a lot more downside than upside. And in that, I mean the absolute amount of money they're going to get in terms of that volume that they produce. So if you overproduce slightly and the market doesn't take it, then stocks will start rising and price will fall. So great, you're producing more but getting paid less. Whereas actually, if you hang on and wait for demand to start picking up and start to see price continuing to edge up, then you can start to drip feed it back into the market without a big impact. I think if anybody came along with a big supply increase, the market would probably react negatively to it.
Carole, the question from monetary policy, you cited the Fed chairman's comments yesterday, a speech, still talking in rather dramatic kind of language, end of a war, emergency job program, the sort of language of the bottom half of the K, as we sort of call it. is there, do you see that same macro concern? Is that an outlook that will ultimately drive policy rather than the upper end of the K, which will continue to drink the Kool-Aid and move ahead regardless? But the bottom half of the K still needs this emergency monetary policy engagement.
Indeed, because if you look at the economies everywhere, perhaps China is one exception because it came out of the pandemic, perhaps, and still not 100%, but better. It's a bit ahead of other countries. But elsewhere, the economy is still in a shaky situation. Yes, it's much better than what we saw last year. And for me, last year was really exception. And I once used this metaphor, I think it was on your show, where I said that it's like we fell into a deep hole. We're going out of that hole, but we're not on the surface yet. And that's the kind of image I would use for the global economy. So, and not only that, I mean, even the chairman of the Federal Reserve, he said, and I quote, and I wrote it down, I did my homework yesterday night. He said, even if we're expecting strong growth in spending, it's neither going to be large nor sustained. So we may see this kind of boost to the economic growth in the coming months, and to prices. But the question is it going to be sustainable? That is a big question that everybody's asking. And that's why you cannot suddenly withdraw your support for the economy and then cause a big problem. Another thing which caught my attention, I thought, okay, that's an interesting similarity with perhaps what the Saudis are doing, because remember, the Saudis like to portray themselves as the central bankers of the OPEC, of the oil markets. So the chairman of the Federal Reserve said, patiently accommodative monetary policy. And I thought, okay, I would replace monetary with oil, and that would reflect the Saudi oil policy vis-a-vis oil markets. So they are all taking it step by step, because we don't have robust fundamentals that support, for example, a direction in one way. It's still shaky. Yes, we're heading in the direction that producers want to see, but at the same time, neither the economy nor oil markets, we can say that they came out of the woods and they are on the surface. They are still recovering from the deepest crisis of last year.
Peter, he was also very dismissive of any concerns regarding inflation. I'm wondering your own thoughts on that, and also the point he was making about the long-term unemployed. In some ways, the COVID pandemic, like it did with many other things, accelerated a inevitable redundancy of so many different jobs and skill sets that were already on the cards, maybe not coming that quickly, but ultimately a certain number of labor positions becoming redundant in the digital economy. That's happened very quickly now. I'm wondering, that's certainly the Western experience. Is there a version of that in Asia? Where do you see inflation?
Well, first off, I'll answer the second one, Sean.
Yeah.
Yes, it's been hit by a bus and it's been a dramatic push back. When you're looking at artificial intelligence and new technologies taking over the workforce. So, yeah, they've been hit doubly hard, and it's going to be a long, hard grind from, moving forward. As far as inflation, we all understand that 2% number. And look, I think that if crude can stay around that 50 to 60 handle, from an inflation standpoint, we've got a couple of years of these low rates, and to get, as Carole, building on what Carole mentioned, to get above that hole. We're still under here, and we're going to climb back up and then start to walk. So I think inflation's not Jay Powell's major issue at the moment. He just wants to see an engagement as far as one, knock over Corona, or certainly from a vaccination standpoint, if that's the answer, then a fall back as far as numbers and the severity, less lockdowns, and get an economy back on track.
I mean, do you need to see that other data point you referenced earlier, the 90 on the dollar index, so that 90 keeps the elevated oil price relatively sober on its impact for inflation in the emerging markets?
I think the US is a better position than what it is in Europe. So yes, that US dollar index has got a 91. No one's raising rates. Maybe that's going to be the number. Don't put your mind back to April and we're 103. So it's been a massive sell-off. Euro strength, pound strength.
I miss April. I miss April for one reason. You just hit it on the head. But that's a very personal, selfish thing. Andy, fundamentals back to where the outlook for the second half of the year here. The markets are looking very much beyond this current window of lockdowns and so forth, and very much driven by the outlook that the second half of the year is going to deliver the demand recovery, flying and jet fuel, etc. Where do you see that, and are we going to have to revise down that outlook, or is it going to come as a scheduled sort of July 1st, 10 a.m., boom, every plane in the world is going to take off?
So I think the honest answer is nobody actually knows. That we've never been in this situation before. Any consultant, anybody who's doing analytics, excuse me, looks back historically, and there's been nothing like this historically that we can actually put a finger and say, well, therefore this is going to happen. I think what we're going to see is in a sense part of this K-shaped recovery. So we're going to find that there are going to be increasing divergences between parts of the economies, between countries that can afford vaccines and can't afford vaccines. So there's going to be a lot of places doing things at different paces. So my personal view is it's going to be actually quite a hard, and I like Carole's analogy of it in a hole. It is not easy to climb out of a hole. Unfortunately, there is nobody with a ladder. We have to climb out of a hole, and that is tough. And we'll slip and we'll slide, but we'll slowly move forward. So I think the whole recovery should be seen as being positive. It's just going to take us longer than we really think it's going to take. So we may not get back to kind of similar level of demand until 2023, 2024.
Andy, could you speak to the news on the OSPs this week, particularly into Europe? Why the Europeans are being burdened with a much higher OSP than Asia at this time from the Saudis and again the Iraqis overnight?
Well, that kind of feeds into the politics of how do you actually calculate an OSP. And to a certain extent, what you're trying to do is you're trying to work out how much is this region willing to pay in order to secure what they're going to be sent. And I think there is a view that the market is slightly stronger in those regions and therefore the OSP should go up. There is no science. People will say there is a science, but there is as much an art as there is a science behind it. So I think it's just another kind of representation of the relative strengths of the markets.
Yeah, let's go to the survey question of today, which touches on some of this theme that we've been talking about regarding the Saudi and more oil. Crude stocks last week fell for a third straight week, their lowest since March. Could the market absorb return of Saudi 1 million barrels per day in the second quarter, which is what the Iraqi minister said overnight, that's what's going to happen, without risking dropping below $60 a barrel? That's kind of a thing to think about. Obviously, second quarter, $60 being a floor rather than a ceiling. But nonetheless, can the market absorb 1 million barrels a day in Q2 without risking dropping below $60 a barrel? Your thoughts on that? Carole, the issues that are also swirling around, the incredible drama in the Senate of the US with this trial of Trump had me up far too late last night, but it doesn't seem to be of any relevance to the markets. Anything else out there that you would be watching this week into next that are to keep an eye on?
Actually, as you rightly said, I think Trump had his heydays, and what we're seeing today is something more like for internal politics. What I'll be watching more is more announcements from the new administration, the Biden administration. For example, we heard that Biden made a call to his counterpart in China, and we're going to see how this is going to proceed in terms of the trade relationship between these two economic powerhouses. They are driving the global economy. But I want to go back to one issue, Sean, that I personally overlooked in my analysis of economic growth and outlook. That is, in some countries, even where the virus has been under control. If you look at Australia and New Zealand, for instance, they did a great job compared to other countries. But there is a new problem resulting. if you want, the unintended consequences of their success in managing the virus. And that is the effect on the labor force, because migration went down, and migration usually drives the economies in these countries. So I think as the months progress, we might see some problems that we haven't really considered before emerging. And that's why I fully subscribe to this notion of remaining in a high risky environment. And I would be very interested to see what the poll is going to say about the Saudi return to the market. Maybe the market can absorb the Saudi, but I wonder whether it can absorb the Saudi plus a relaxation of OPEC. That might be too much for the market to absorb.
Peter, your thoughts on that comment Carole made regarding Australia and New Zealand?
Well, 2 points. First off, Sean, yes, it's certainly a handbrake, but the other side is we've missed out as far as tourist dollars. We're in the middle of summer here now, so the tourism sector has been decimated, and how that rolls back into, how it plays out into 21. Though I network with quite a few senior guys in real estate, residential real estate, and what we've noticed is that there's an over capacity as far as Aussies coming home, expats, to the tune of 250 to 300,000, they tell us, across to Australia, back home from the likes of Hong Kong and other nations, and the boom in real estate has just been one-way traffic. And the other side is that the economy, people are moving from cities to rural areas on the coastlines. We've got, massive coastlines. So that may be another part to it. There is no doubt that, we've been very, very stringent as far as the lockdowns and in turn, the 14-day isolation. So let's see how we are at the start of April, say, and whether we back that off and the vaccines, and that's going to be our saviour. So it's a hard one. But New Zealand also is performing very, very well.
Peter, just on that other point, the early signs of the China-US relationship under Trump and where that leaves countries like Australia in their challenges with China at the moment. How is that looking at this point? We're seeing a lot of US naval vessels in the South China Sea in recent days. Yeah. How do you see that at this point?
Well, there's two things on that also, Sean, that there's military activities in the Indian Ocean, and we also know that Western Australia faces the Indian Ocean. So that's China, Russia, and someone else. I'll think of the other nation. And they're doing military work, but the Aussies are doing other work with the US as far as militarily in Guam at the moment. I think it's really starting to raise a lot of Australians' viewpoints that there's a super city projected to be built in Papua New Guinea to the tune of $40 billion. And we all understand that what Japan tried to invade Australia through Papua New Guinea in the Second World War, and we defeated them. And that really is causing much concern to domestic policy here. And we haven't got really many allies.
Who's funding the Papua New Guinea project?
China, Sean. Yeah. China. Yes, it's a China $40 billion project to be a major city, port, and you name it, everything else. And one would assume that there'd be some form of military there. So that's right on our border. That's a very
always much the soft underbelly of Australia, Papua New Guinea, in that sense.
Yes, it is. Historically, and we've always been to their. We've always assisted them greatly, and we play, international sport against them. We've got very strong relationships, but this could just be another extension of China's tentacles across very much that Asia precinct or down the bottom of Asia, and where we play with our neighbours or our allies being Taiwan, Japan, United States, and New Zealand.
Let's get the survey result and see what the room's view is on this. No, a big sort of 2/3 to 1/3. Andy, your thoughts on that and outlook as we go into the Middle East weekend?
So I also voted no, and it does depend upon what Carole said. I mean, if the Saudis kind of drip it in as demand goes up, then it will accommodate it. I think for me, the big thing looking forward is, over the last couple of weeks, we had a whole swath of vaccine announcements that were very positive. And then more recently, we've kind of seen this, but you can't give this vaccine to over 65s, it's not as good. And I think that doesn't help market sentiment. And I think what we're being shown is actually very early scientific investigations that may or may not be right. I mean, you had the Israelis saying it was only 33%, and then it became 60%. And you've now had the World Health Organization come out and say vaccines are fine. I think what the market needs in terms of vaccines is a clear forward process. This is what's happening. This is what's working. This is what's not. Here's the production coming up. Here's how it's going to be distributed. Because I think the biggest Achilles heel we have is all the developed worlds get vaccinated and all their customers and all their suppliers don't. And that ain't going to work. The world has to get to a place where everybody is vaccinated.
Well, that will certainly take a while, no doubt about that. And I think it's an interesting thing as to how that dynamic will play out when you've got these pockets of vaccination and the markets trade on the pockets because they're the sort of wealthier ones, and yet the sort of majority of the populations are not. I think what I'll be watching also this weekend as we go forward is if we see some data points coming out of China vis-a-vis the Lunar New Year and the non-traveling piece of the Lunar New Year. And what is the legacy of China's policy regarding managing little outbreaks that happen? Even in China, the sort of poster child of the post-COVID world still seems to be vulnerable to significant moments that it doesn't take a lot of infections to lock down a city of 20 million people or lock down a population of multiple hundreds of millions. And how many times in 2021 may that happen in China? I think that's why this Lunar New Year, I think, is some kind of an indicator as to where China's vulnerability still stands with managing COVID. But that's enough said for today. Thank you, Peter. Thank you, Andy. Thank you, Carole. Everybody have a great weekend, and we'll catch up with everybody next week, the Middle East week. Until then, all the best. Thank you.
Thank
Thanks,
you.
everybody.
Bye-bye.
Thank you. Thanks, everyone. See you, Sean.